Okay, folks, welcome to The Contrarian Trader. This is Bob Desmond. What I wanted to do this weekend is revisit my January 2015 stock market forecast, which I posted on January the 3rd. It's posted on Stock Twitch and Twitter. At that time, I was longer-term bearish on the markets, short-term bullish, and I just want to go over those calls, see how I did, and discuss where I think that we're heading, and discuss where I think we're heading in the intermediate term. So, again, you can go to Stock Twitch or Twitter. January the 3rd posted. I also posted my best stock pick at the time was DBC, the DBC Commodity Fund. And we'll go over that chart, see how I did there as well. Okay, so let's kick it off with the Dow Transports. Back on January the 3rd, when I created the stock market forecast for 2015, I mentioned that the Dow Transports were not making or confirming new highs on the Dow Jones Industrial Average. We had peaked out in November of 2014 while the Dow Jones continued on to make new highs well into late December. And fast forward to present day, you can see that the RSI on the Dow Transports continues to make lower highs. Very, very weak. It cannot break out to all-time highs. The divergence between it and the Dow Jones Industrial Average continues. Very, very bearish stuff. And as I always like to tell my members, the market sends us signals. We can blame losing money on black box trading, algorithmic trading, fat finger mistakes on the part of institutions. But really, in the end, if you're not day trading and you're swing trading or position trading, the markets send you signals. And the divergence on the Dow Transports relative to the Dow Jones Industrial Average is a signal. You could also look at the NYSE, the largest index in the world. And while the Dow Jones Industrial Average was breaking out and holding all-time highs along with the S&P 500, the New York Stock Exchange Composite Index was not. It was not confirming the move higher. The NASDAQ Composite, I was bullish on the NASDAQ comp at the beginning of the year, short term. My bet was that they had to make it hit 5,000. That was going to be the story. The news media spun to try to get the dumb money off the bench. I don't call people that. That's what they call us on Wall Street. So as I told my members, we need to be aware that they are going to spike the small caps and the micro caps, in particular the biotechs. If you take a look at the BIB, this is the ProShares Ultra NASDAQ Biotechnology Fund. They had to squeeze these guys to extreme overbought conditions, RSI on a monthly basis, 81.64. They needed to squeeze the shorts on the BIB or the biotech index in order to get the NASDAQ to 5,000. Now we're overbought and susceptible to a sell-off, which we're seeing. What else did we predict at the beginning of the year? Well, if you take a look at this weekly chart of the U.S. dollar, here's the beginning of the year, January. I predicted that we would soon see a correction in the U.S. dollar because it had gone to extreme overbought conditions. We got it. That I also forecast that the U.S. dollar would make new highs year over year, and it would also weigh on earnings of the multinational names. Sure enough, earnings came out for Q4 2014, and what did the multinationals blame disappointing earnings on and poor forward-looking guidance? The strong U.S. dollar. This is what I teach my members. It's not good enough to go look at a chart of some small cap name or penny stock looking to get squeezed. That's not the way to make money in this market on a long-term and consistent basis. It's to understand the macroeconomics, and that's what I get paid for. So we knew that going into Q1 2015, if you saw a strong U.S. dollar, you're going to see weakness in U.S. stocks. What happened last week? The U.S. dollar shot higher, and the stock market on Friday was clubbed like a baby seal. S&P 500 weekly chart, down week over 1.58%. Back on January the 3rd, I warned about this divergence on the S&P 500, which goes back to December of 2013. That's how far back we look. We believe in using multi-period charts, daily, weekly, monthly. And if you take a look at this weekly chart, you could see RSI peaked out on the S&P 500 and has been in a downtrend ever since, while the S&P 500 has continued on to make new highs. Where do I think that we're going on the S&P 500? I think we're going down. Now, when I say that, topping out of a stock market is a process. Markets, unless you have a financial crisis, do not go straight down. We'll have a rounding top. Will we see counter trend moves? Yes. All the oscillators on a weekly basis are rolling over. Lower highs. Ultimate oscillator, lower highs last week. Stoch RSI, lower highs. Slow stochastics rolling over. MACD poised to go negative next week. On January the 3rd, I also predicted that we would see a rally in commodities, which had been in a death spiral. We were long of it. We enjoyed this rally on the DBC Commodities Index Fund, and we got out. Why did we know to get out? It's because we saw the U.S. dollar was beginning to consolidate and poised to rally, and that would be bearish for commodities. So we moved to the sidelines. DBC, weekly chart. Here you have it. This is the ETF. So now I'm expecting to see at least a higher low get put in, or it's quite possible that we could break down to new all-time lows if the U.S. dollar continues to strengthen. IWM, the Russell 2000. We have been building a short position on the Russell 2000, and you may be asking, how was my week last week? Well, in all honesty, I took more losses last week than I did profits off the table. However, net, I still had an up week. That's how you know you're a successful trader, when you're able to close out losing positions and they outnumber your winning positions. However, you're still profitable on the week. What does that mean that I did? It means that I was able to identify laggards in our portfolio. We saw topping action on ZAZA. We saw a small loss. We identified that other stocks were having failed breakouts or retests of prior support and were failing. First out, best out. We took a small loss and moved to the sidelines. If I wanted to get back in on ZAZA, I would do it now at a lower price. Will I do it? Maybe, but I'll be sending out an alert to members if and when I do so. YOD, You On Demand Holdings. This is another one. We closed down below the lower band of the rising uptrend channel. We were out. Thank goodness we were. It moved lower. Intel. I saw topping action up here on this breakout. I saw other stocks failing to hold support. We scalped a trade on Intel. What happens subsequent to us booking a profit? The stock fell to pieces. Thank goodness we got out. And this was a profitable trade. What else had a failed breakout last week? Facebook was looking good. We were not long of it. We were not short of it. But it had a breakout last week, flashed a topping tail, which is a sign of resistance, at resistance, no shock there, and it broke down below key support. This is a breakout point failure. I will bet you a nickel that Facebook is going to come down at a bare minimum, retest this lower band of the rising uptrend channel. I will bet you 2 nickels that we break down below this key support level and that we head down to prior support. This support level will probably not hold on Facebook. Very, very bearish event last week. Whenever you get a stock that breaks out above key resistance and then fails and breaks back down into that prior formation, very, very bearish event. Expect selling on Facebook. How was our volume Friday? About average. Apple. If there's only one company out there that should be rallying to all-time highs, it should be Apple. But Apple has actually been acting as a laggard. It's the only company that really knocked the cover off the ball for earnings season, yet it's trading down. This is what I like to teach my members. I teach them to watch for tells. What is a tell? You would expect with Apple's earnings that it should be outperforming. And when I say earnings, I mean their quality of earnings, their forward-looking guidance, their valuation relative to the S&P 500. Very, very reasonable. So one would think that Apple should be moving higher, yet it's correcting. So this is a tell. When I want to see what the S&P 500 is going to do, the first stock I go to is Apple. How is Apple doing? Why is it underperforming? What is the market telling us? Again, the market sends you signals. So our game plan as we proceed now into the end of Q1 of 2015 is to now begin to look to add to our short positions, because our short positions did very, very well last week. And I will be sending out alerts to members when we decide to build on our short positions. We'll be looking at names like TZA, which puts you 3 times short of the Russell 2000. A beautiful day on Friday. We'll be looking at volatility plays, which puts you short of the S&P 500 and long of volatility. TVIX. Beautiful support being held at 1.97. We want to be building our positions, and I will be sending out alerts to members. So, folks, beware of this market. Please go back out and check out my forecast for 2015. The charts do not lie. The media does. Remember to trade the charts and not the story. And if you learn how to do that, you'll become a very powerful trader. And don't forget to take advantage of our 14-day free trial offer. Members, I will be working on the week ahead commentary, the focus stock analysis, and market pulse check. That'll be coming out to you this weekend. Everybody have a profitable trading week. And please use tight stop loss orders. Identify when the market is telling you to get out. If you don't know how to do that, join the Contrarian Trader. I'll teach you how to do it. Be well, folks. Have a great weekend.